What's up everyone? Let's talk about NIO. NIO had a crazy and wonderful 2020. It went from its low of just around $2-ish in March to its peak in December at $57.20, which generated over 2,500% gains. In early January of this year, it continued to rally as high as $66.99. However, in less than 2 months, NIO tanked by more than 45% and is now trading at $36.13. In this video, I will share with you the 5 reasons why NIO stock price is depressed, and despite everyone on YouTube telling you to buy the dips, I'm gonna tell you don't. Well, just not yet. I will give you my top 5 reasons why, and you will probably want to watch all the way to the end of the video to find out, as this will save you lots of mullahs. So stick around. Swadikap, that's hello in Thai. My name is Anthony, and welcome to Quantum Finance. I'm a former engineer and data analyst that have turned $50,000 into over $500,000 in 15 months. If you're new, welcome. And you're a returning viewer, welcome back and thank you for your support. Please note that I'm not a licensed financial advisor. Everything I say in this video is purely for educational and entertainment purpose only. And if you want to get free stocks, be sure to click on the Weibo link below in the description or in my comment section. You'll get 2 stocks up to $1,900 per share like Google stock. Yes, our viewers have received Google stock. All you have to do is set up an account and deposit $100. Also, come join us in the Quantum Finance Patreon for our weekly watch list with buy and exit price points and other great technical analysis to help you make lots of moolah. To join, please click on the Patreon link in the description below or in my comment section. With that out of the way, let's get right into it. Before I start, I do have to disclose that I'm long on NIO and has been accumulating since the $8 range. So what is going on with NIO stock price? It seems like since its peak, it has been bleeding and it just won't stop. Well, first of all, as you know, the overall market is in correction. Along with it, the EV market's running out of power. It needs to recharge. NIO is down nearly 30% year to date as investors flee to high-tech, high-growth, and emerging market stocks amid fears of rising inflation and a spike in interest rates. NIO is down over 45% from its peak at $66.99. Unfortunately, many experts are saying that the treasury yields rate could eventually exceed the 2%. So we're not out of the woods yet. 2. There have been concern that the EV market's in a bubble and it now has burst. The valuation has also come to question in December 2020 and January 2021 when NIO was about to surpass a $100 billion market cap. Since then, it has slipped from the mid-90s down to $56 billion market cap. Despite that, as of today, NIO still ranks number 8 the most valuable automakers in the world and number 2 on pure EV automaker just right after Tesla. The key issue here is that NIO is yet to be profitable. Third, NIO is no longer a baby and is now a toddler. Investors have high expectation of NIO to run as fast as it can when it's just learning how to walk. Considering that last year, NIO fell and almost went bankrupt. NIO needs to manage the investors' expectations as they have lofty bullish projections and expects NIO to perform beyond achieving it. In my opinion, NIO's share price fell from its all-time high partly due to a number of young upstarts entering the EV arena. Compared to these new players, NIO looked like a grizzling big kid. Just because NIO is a toddler, isn't a baby, does not make them a big kid. NIO is still a young company with a lot to prove. For one, NIO will need to strengthen its balance sheet and successfully expand into the European market. In other words, if NIO is an American company, its stock price would be well over $100 right now. Come on, CCIV or Lucid Motors, which is the pre-revenue company, sold 0 cars, guys, and has a valuation at $47 billion. I just did a video on this. You can click the link above on the top right corner to watch it if you have not already done so. Compare this to NIO. NIO has been selling its EV in the world's largest market, has L4 autonomous self-driving capability software, which Lucid, by the way, doesn't even have, has BASS or battery as a service with its battery technology and other cool stuff. NIO's market cap sits at $56 billion. I think you get my point on this one. Don't get me wrong, I am also long on Lucid or CCIV stocks. Number 4, NIO is one of those stocks you either love or hate it. And you hate it just because it's a Chinese company. Let's face it, Chinese stocks have been looked down upon as something you cannot trust due to accounting issues. It is a potential fraud and possibly of being delisted from the US stock exchanges. Who knows, if NIO cars are sold in USA right now, they could be deemed as a spy equipment and pose as a national security threat. Sounds familiar? Well, that's because Tesla was recently banned on China's military facilities and its staff from operating it. Also, do you recall a Chinese drone company called DJI? Well, it was delisted from the US stock exchange and banned from the US because of its ability to fly over places, take pictures, videos, and sounds. Yes, posing as a national security risk for USA. Lastly, the global chip shortages finally affected NIO. On Friday, NIO announced it will temporarily halt production at its JAC NIO plant for 5 days starting on March 29th. In doing so, NIO has reduced its first quarter delivery guidance from 20,000 to 20,500 units down to 19,500 units. The global chip shortages is affecting every auto manufacturers ranging from GM to Hyundai to Volkswagen and now NIO. The shortage in chips has led to semiconductor manufacturers to ramp up production and invest in increased capacity. So industry experts expect this to be short-lived. However, I'm not so sure about this. Let me give you a brief history on how we got to this point, and you will then understand my reasonings. Well, a confluence of factors including global pandemic, factory shutdowns, booming demands for laptops and tablets, trade war against Chinese tech companies, and drought, yes, drought, have caused global shortages of chips that has rattled the electronic sector since December 2020. During the pandemic, the overall confidence in the economy was low, so auto manufacturers canceled or reduced their chip orders as it is a high-ticket items and reduced orders for parts as well. This is because US and other countries were in a lockdown. The car sales were down by as much as 50%, and there's really no need for cars when everyone was working remote from home. During this period of lockdown and working from home, there was a huge surge of demands for laptops, smart TV, smartphones, video game consoles, electronic devices, and just about everything that has a chip in it. That's when we saw a period of soaring and unprecedented demand. In January alone, chip sales reached a record $40 billion, or up 13.2% on the same month last year. Chip manufacturers switched gear to produce chips for those electronics and less for autos. Now that we have the vaccines and things are reopening, people are now needing cars to travel again. Auto manufacturers started to ramp up, but the chip manufacturers just can't produce them fast enough as several industries are fighting to get priority in factory order books. As a result, 672,000 fewer cars will be produced in the first Q1 of 2021. You're probably wondering why there wasn't any backup inventory of computer chips. For one, myself, having worked as a senior supply chain program manager at one of the big server manufacturer company for AWS or Amazon Web Services, I can say that microprocessors and microchips are very expensive and it depreciates its value quickly. So you don't want to store those chips in your warehouse to collect dust. Also, the fact that most companies will operate in just-in-time manufacturing and with very low stock level to keep the cost down, while now everyone's rushing to replenish their supplies. This global supply chain for microchip are stressed or broken and nobody knows what to expect. This is because semiconductor factories have limited capacity and building new factories takes massive investments. For instance, it costs Intel well over $1 billion just to build out a fab or fabrication center to produce the microchips, and often it takes several years. I'm very familiar with this as I used to work as a senior industrial engineer at Intel. You probably then are asking, so why can't chip manufacturers just increase output to meet demands? Again, the problem is most companies are now fabless. People don't realize that companies like Apple, Nvidia, and Qualcomm only design chips and then outsource their manufacturing to original equipment manufacturer or OEMs. Right now, much of the world's supply on computer chips come from Taiwan, and most are made by the Taiwan Semiconductor Manufacturing Company or TSMC. Hint hint, as TSMC stock could be a good investment during this period. Compounding the pandemic trouble is the trade war between US and China, which I won't get into. So now everyone is wanting to be able to guarantee their own supply of chips, and the current shortages has made it even a high priority, so everyone's competing for the shortages. As if this wasn't enough, the weather is also against many chip makers. The manufacturing process requires a lot of water. TSMC makes chips for dozens of companies and churns through 156,000 tons of water a day. Right now, there's a serious drought in Taiwan, and reservoirs are drying up, and the firm is now bringing water to the factory via trucks. So as you can see, this will affect NIO. Most car manufacturers like Ford, Toyota, and Volkswagen have already partially shut down their factories in recent months because they can't source the chips needed to produce their cars. Some analysts believe it could take up to a year for manufacturers to get back up on track, and then a further 6 months for stock levels at various companies to reach normal level. Other data suggests that the chip industry has been edging closer to its full manufacturing capacity for some years now. So in a way, this could have been expected, and there wasn't enough of a buffer in place to handle fluctuations in demand. In any case, chip factories are ramping up capacity now, but this will take time to have much of an effect. So we could see that the chip shortages to further drag out into Q2 and possibly Q3. This will slow down NIO's manufacturing output. The good news is that NIO will be selling everything it could produce. Okay, now that you have some knowledge why the reasons that NIO stock is depressed, let's take a look at its daily chart. It is not as obvious, but you can see that NIO is forming a head and shoulder with a neckline. No, that's not head and shoulder as in a shampoo. This is a head and shoulder pattern. It is a chart formation that appears as a baseline with 3 peaks. The outside 2 are close in height and the middle is the highest. In technical analysis, a head and shoulder pattern describes a specific chart formation that predicts a bullish to bearish trend reversal. The head and shoulder pattern is believed to be one of the most reliable trend reversal patterns. So in NIO's case, the stock seems to be heading lower. As you can see, NIO looks to be trading in a channel between $34.50 to $39 range. It was unable to break below the $34.50 support level twice. It also struggled to break above the $39 resistance level. From a high overview, NIO has been trading in a channel between $30 to $60. The stock have a support near the $30 or the neckline. It was previously a resistance and now a support level that NIO struggled to break the $60 multiple times. This will become a resistance in the future. Ideally, I would like to see NIO to consolidate before the price move higher, but the bears will most likely want to see it to fall below the $30 support level. If it does, it will confirm the head and shoulder pattern for the bears. My biggest concern right now is that the treasury yield rate will continue to rise over 2% as analysts have predicted, and that the fact that the global chip shortages will drag out into Q2 and possibly into Q3. This is why I'm telling you not to buy the dips just yet. Unlike every YouTubers are telling you to do so, I'm presenting you data and facts, straight to the point, no bullshit. The smart thing to do is to wait and see if the trend will continue to go low below the $30. Wait for a signal on when the stock has reached the bottom before you jump in and buy. I say this because I don't want you to be catching a falling knife. Ever bought a stock like NIO when it was in the 50s and it just kept going lower? Then you heard somebody say buy the dip, and then you bought some more at $40 and it kept going lower, and it is now in the 30s, and now you're like, hey, let's buy some more. Let's wait. Now, don't get me wrong, it is a good price right now in the 30s. Now, there's nothing wrong with cost averaging down, and don't get me wrong on this, but my point is that if the technical analysis shows that NIO stock will be heading lower, wouldn't it be wise to wait a little longer and not catch a falling knife? Let's take a second to think about this. Just these 2 reasons alone are more than enough to drive NIO stock price down another 10 to 15% within a short period of time. I will leave you my final thought on NIO's head and shoulder pattern. Please be careful as the market is still choppy. If you like the technical analysis like this, especially with my entry and exit points along with the probability percentage, make sure to join our Quantum Finance Patreon page. Here's what some of our members are saying. Special thanks and shout out to Adam, Sawana, and Steve. Adam Brown stated, quote, "Great call. I've been making lots of MULA with this swing," quote. Suwana Mason Singh said, quote, "Thanks, I have learned a lot. I wish I would have joined earlier. It would have saved me thousands from making mistakes on investing," unquote. And lastly, Steve Berman stated, quote, "Anthony, this is ideal information, especially for a beginner like myself. Best channel on YouTube by far," unquote. So there you have it. If you find the video of value and you have not already done so, please like and share the video. Please also hit the sub button and the alert bell. Thank you, and let's go make lots of MULA.